Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. I had a friend over the weekend ask me what's going on out there. I said, no, nothing at all. It's all going on. There are so many cross currents right now. If you look at markets on Friday, we had a great day. The president saying that Vice President J.D. Vance will be going to Pakistan for further talks. I think the talks will be different this time around. And hopefully we come to some short-term resolutions with this. The president slated to meet with President Xi of China next month. I think if the talks go well short-term, that visit will happen. If the talks don't go well and this prolongs, I believe the president is willing to take further action here, and those talks will likely not happen. For markets are looking past this right now. For us in the U.S., we have identified 3 touch points. One, clearly energy, well off its highs. If you look at oil in general, the U.S. 10-year, well off its highs in terms of yield. A 4.25% yield is well within the local range of what we've had recently, and well within the local range of what we've had really over the last 4 years. And then U.S. credit, which is still well behaved. The bank earnings solid across the board, identifying their private credit exposure in general. And markets in general are behaving fairly well, given all things considered right now. So we continue to remain optimistic on the U.S. economy. We continue to remain optimistic on the U.S. consumer. The touch point here clearly is on the employment side. Those numbers have tempered, but they've been reasonable. If you look at continuing claims, they still indicate a labor market that has tempered, but that will continue to plow forward. So we remain optimistic in general. Overall capital market activity has been opportunistic, but we have a long year ahead. We hit this pocket last year in April. If you look at markets then in April of 2025, if you look at markets now in April of 2026, it would appear that we've bottomed at much higher levels moving forward. So stay positive. We remain positive. This week on the ground, we get retail sales. Tomorrow, we have a 20-year auction. But in general, I think the rate structure looks good here. The Fed is in their blackout period. They're on hold here, and they should be, because there is so much uncertainty for central bankers right now around the world. The one thing that we have said, and we remain convicted to, is that raising formal rates in this environment is clearly not the answer. So the preference from our perspective is just sit on your hands for now. Let the dust settle. The dust will settle. It may take more time, but raising rates here is not the answer. Wishing everyone a great week ahead. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.